At Metropole TVKE across all your social media platforms, 2146, that's your SMS line that says, best as I am, my name is Simbalaji Charles Kiage. It's a new year, and so we got to understand where we stand in terms of the new taxes that we are supposed to conform to from the taxman, that is Karen. And this morning we are joined by Monica Geduba. She is the Karen Domestic Taxes Department. All right, let's talk about what it is that we want to talk about this morning, therefore. Now, how well do you understand new Kenya Revenue Authority taxes? How do they affect you and how would they work? Well, all right, let's get into it this morning. Monica, good morning. How are you doing?
Good morning. I'm very well. How are you?
We are fine. Thank you. Thank you very much for taking time this morning to speak to us this morning. I want to start from what is new now, an announcement that has come from you in terms of the new tax disclosure program. Can you talk to us about that? Who's eligible for that and what are you targeting? And how different is it from the other tax disclosure programs that we have seen come from your office?
Okay. So the voluntary tax disclosure program is a program that allows a taxpayer to declare their previously undisclosed tax liability.
Yes.
In Kenya, we have what you call a self-assessment system, where you assess yourself for the tax period and file your return, declare your income versus maybe your expenditure, and determine your taxable profits.
Yes.
So you find that maybe in the course of doing that, there's some undisclosed income that maybe you omitted for some reason or the other. So now you have a chance to have a clean slate by declaring this income, all the material facts, give KRA all the material facts, and then you will get some waiver of penalties and interest. So this program began on 1st of January 2021.
Yes.
Meaning that as a taxpayer, you can disclose liability 5 years prior to 1st of July 2020. So when you disclose this liability and get into a payment plan in 2021, 100% of your penalties and interest will be waived. When now you come in 2022, which is the second year of the program, 50% of your penalties and interest will be waived. In the third year, we waive now 25% of your interest and penalties.
That's exactly how it is. And I know, Monica, I'm going to ask you this question because there have been other voluntary disclosure programs from your office as well. How different is this? And you say that it runs 5 years back. What about if I have not disclosed something that will run 6 years back? Do I have to disclose up to 5 years and then the 1 year that is left, I will take full penalties?
Okay. So in Kenya, we have the Tax Procedures Act.
Yes.
So the Tax Procedures Act allows the commissioner to go back 5 years.
Yes.
So it's within the limits of the Tax Procedures Act that the disclosure program has to be in line with the Tax Procedures Act. So that's why the 5 years is there, meaning that those are the only qualifying liabilities. We cannot now go back more than that unless now we go through another court procedure to approve further maybe 6 years or more.
Yes.
So if you have tax liabilities within the 5 years, then you disclose them, disclose all material facts, give accurate information to the commissioner via the prescribed form, which is now done online via iTax.
Yes.
Then the commissioner will evaluate your application, determine whether you've given the correct information, get you into a payment plan, you agree whether you're going to pay it in 6 months or 12 months. Then when you now meet the terms of the agreement, you get the waiver.
Yes.
as specified.
Yeah, I'm sorry to take you back because this is exactly what will interest a lot of people, not for one reason or another, sort of disclosed their income within that period. So what am I not getting? What am I running away from? Am I running away from the penalty or the interest accruing from this penalty? What am I running away from? Should I disclose right now?
So we have, in taxation, we have principal tax.
Yes.
So, for example, if you're in business, your income is subject to certain forms of tax.
Yes.
This can be maybe some corporate taxes, some VAT that maybe you have not declared, or even maybe some capital gains tax that you had not paid. So when you you don't pay those taxes, they accumulate penalty, plus now the amount that's accumulating interest at 1% per month.
Yes.
The late payment penalty is 5%. So you can see if you have tax liability for the past 5 years, you have, let's say, some principal tax of 1 million, it has accumulated interest for all those years plus the penalty. So the burden would be so much heavier if the penalties and interest are not waived. So what KRA is offering here is it's saying bring this information, come declare in a confidential manner, where now you tell us this is the tax liability that I owe, and from now henceforth I'm going to do as required of me. Yes, I know there's some gray areas, and yes, this is the tax due, but then from now henceforth I'm going to start on a new slate and start complying with my taxes.
Pretty much. All right, let's move on to another one that we do know is also taking effect in 2021. Let's talk about this minimum tax. Monica, how do you understand it? And well, I mean, there have been talks about how it might be or might be good. Let's start from how it might be good for those people who understand it. And when is it taking effect?
Okay, so to understand, let's just understand what minimum tax is first. Yes. So minimum tax is a base tax that will be paid by people in business whether they are making a profit or not. So in a traditional setup, businesses pay taxes when they make a taxable profit.
Yes.
So you find that there are some businesses that have been in perpetual losses. But now the government has decided that everybody has to put something into the tax basket. And that's why, hence the name, minimum tax. So this minimum tax is at 1% of your gross turnover paid on a quarterly basis. For taxpayers who pay their taxes under the annual system, they already know about installment taxes, which are paid on or before the 20th of the 4th, 6th, 9th, and 12th month. Those installment taxes are paid by business that are in a profitable position.
Yes.
So it means that if you're not in a profitable position, you don't pay something. So now you're being told you have to now pay something. So on the same, let's say the first quarter, when you have to pay the installment tax, you do another calculation of the minimum tax. So it's 1% of your gross turnover for the quarter without deducting any expenses.
Yes.
Then compare that with the installment taxes and pay the higher of the two on that 20th. So the next, on the 6th month, compare the installment tax versus the minimum tax and pay the higher of the two. At the end of the accounting period, you will do your maths and find maybe I still have tax liability. Then you now be able to deduct either the installment tax or the minimum tax that you have paid in the year. In case you're in a loss position, then the minimum tax that you paid during the year is
yes.
final tax from that business. Yes. So the benefit of this...
Yes, Monica, just continue. Mm-hmm.
Okay, yeah. The benefit of this is, and now we are sharing the tax burden, because we'll find that there's many businesses that have been in perpetual losses year after year, year after year. So there's a question of why would you be continuing with a business if it's not profitable?
Yes.
So we are saying you're also utilizing the resources, you're using the infrastructure. So the government is saying contribute something, and that is what is the minimum tax. And this concept is, even in Tanzania, they have a minimum tax, and it's a global concept, just to have every taxpayer who is generating some form of taxable income pay something or contribute something to the tax basket.
Are we opening an avenue for me to say, well, my business is loss-making, so I could pay that 1%?
Sorry, I couldn't hear you.
For business to declare losses when in reality they are not, because it looks like an easy way out for them.
No, it's not an easy way out, because remember, you are doing a comparison between the installment taxes.
Yes.
The installment taxes are based on your taxable profit. So if you're in a profitable position and your profits are like the installment tax due from you is more than the minimum tax, then you pay the installment tax.
Yes.
If the minimum tax is, if the installment tax is lower, then you pay the minimum tax, which is the higher of the two. So with each due date, like on the 4th, 6th, 9th, and 12th month, you're doing a comparison between the installment tax, which is based on your taxable profits, and the minimum tax. So it means that if your taxable profit is still high, you end up paying the installment tax, which is based on that taxable profit. But if then this minimum tax is the one that is high, that's 1% of your gross turnover, that is what you pay. And it means that a loss-making entity, which was not paying any tax because they were in a loss position, will now contribute something.
Pretty much. And that is geared to essentially putting everybody under the tax bracket, isn't it?
Yes, and also expanding the tax base.
Yes.
Because now, as KRA, we have to now ensure that we are expanding the tax base to ease the burden on maybe the people who are employed, because now that one, it's easy to capture that pay as you want. But now when it comes to business, we have to now come up with ways to ensure equitability and have more people contribute to the tax basket.
Yes. Is it possible from your office, Monica, this morning to say that, wow, if we introduce minimum tax, these are the number of businesses, maybe we go back to 2019, 2020, that have just been telling as well that we've not been making profits, so we're not sort of open for taxation. Is it possible for us to have a target, probably a number of the businesses that you are going to include in that bracket under this minimum tax?
So we might not have the numbers now, because as a taxpayer in Kenya, you
Yes.
now have a choice. It's
Yes.
either you're filing under what we call the annual system, where the issue of minimum tax and installment tax comes into play.
Yes.
But also we now have turnover tax, which has now allowed incorporated entities, either companies or partnerships, to register if they have a turnover of between 1 million and 50 million.
Yes.
So the difference between this annual system and this monthly system is a taxpayer pays on a monthly basis. So if you remain in the annual system of paying your taxes, then it means that you have to now be paying some form of minimum tax or installment taxes. If you join the TOT, the turnover tax,
Yes.
then you pay your taxes at 1% of the gross monthly sales. So of course, this is meant to make it so much easier for companies in Kenya, for the informal sector to comply with taxes, because we find that the annual system requires you to have some accounting background, get an accountant who prepare for you the profit and loss account. But now this turnover tax is geared towards the informal sector, because your basis is the gross sales. So the tax is at 1% of your gross monthly sales.
Pretty much.
But maybe by the end of the year, we'll be able to now to have some statistics about how many people have taken up this annual system and how many people have taken up the turnover taxes.
Yes. Any target though in terms of what you're targeting?
Just the normal KRA target.
Yes.
That is given by Treasury. So you see, being a new system, it has to take some baby steps. So we cannot now overweight with maybe some huge targets without now just getting people to understand it. Let it take its natural process of growth so that it takes root. Because, for example, the installment way of paying installment taxes has been there, and taxpayers have been paying installment taxes. But this is something that has been there for a very long time. So this being a new concept, this being the first time that we are implementing a minimum tax, we have to ensure that our taxpayer knows about it. And that's why we have this kind of forums. We have online forums where we now invite them. They know about it. And with time, they accept it. Because sometimes you find there is resistance to something new because they feel maybe they don't understand this tax. So we are using that education, this online platform, the platform you've given us, to tell the taxpayer about it, to explain it to them, so that it can be taken in and they can be able to comply.
Yes, Monica, I know this is a direct question. You have sort of highlighted the difference between what minimum tax is really trying to do, but this is a direct question that we got from one of our viewers, and I'm going to ask it the way they put it so that you can actually talk to them directly, therefore. Now, they're saying that industry players opposed to the minimum tax argue that the new tax will kill businesses because it's based on gross value of the transactions as opposed to the net profits. How would you respond to that, Monica?
So yes, the minimum tax will be on gross sales, meaning that you'll not be able to deduct any expenses. But then it's at 1%. Remember, it's a base tax, a base minimum tax.
Yes.
And the 1% means that if for this first quarter you make your 10 million, then your tax is at 1% of the 10 million. But then let's come to the next quarter, you find that your turnover has maybe even gone to 1 million. You're still your tax will be at 1% of the 1 million. So it adjusts itself according to how your business is going. And I feel that's a good tax system, because if we were to say pay this amount regardless of whether you're selling or not, we are saying you are selling at this quarter you made 10 million, pay on that. This one you made 1 million, pay on that.
Yes.
And also as a business person, you have done your math. So there's some margin you put in your business. And most margins are not controlled by the government. In the Tax Amendments Act that was just signed in December, some exemption were added. So they exempted businesses whose margins are determined by the government from minimum tax, because
Yes.
then that would really affect their business. But in the free market, you are selling at a profit when you are in business to make a profit. So you already have some form of margin on that sale that you're making, even if you're not allowing you to deduct any expenditure. And you can see the rate is also 1%, which is the minimum, I think the most minimum tax we can ever, that's been there in Kenya in terms of rate.
So another question that I would like to ask is this taking effect as of January 1st, 2021?
Yes, it took effect on 1st of January 2021.
Yes.
But the payments will be done on or before the 20th of the 4th, 6th, 9th, and 12th month. And we say 4, 6, 9, and 12 because your year as a business may be running from 1st of January to 31st of December, but then there's another taxpayer who may choose a year of maybe running from May to a 12-month period up till April. So because of that, we say on or before the 20th of the 4th, 6th, 9th, and 12th month, and then you have to pay your balance of tax on or before the end of the 4th month in the coming year.
Yes.
So those are the due dates. Yes.
Monica, but just as we clear this conversation this morning, I'm going to also mention another tax, just likely therefore. Can you pretty much tell us what it's geared to, the digital services tax? Is it also coming into effect as of January 2021? And what is it about and what is it gearing to what? Who is affected in that as well? Because there's a certain percentage, the 1.5% that is also attached to that. Can you talk to us about that?
Yes. So this year, we've seen that the digital platforms
Yes.
are generating a lot of income. There's a lot happening in that marketplace. So as an organization that KRA being a progressive organization, we have to expand our tax base depending on what is happening in the market. And now what is happening in the market is the marketplace is becoming virtual, online. So that's where the money is. And the KRA has to follow where the money is. So we have, for example, the Netflix, the Showmax, the Facebook, they are generating taxable income in Kenya. And because most of them don't have a physical presence in Kenya, we're not able to get them.
Yes.
So what the government has done is introduced this digital service tax at 1.5% of the gross transaction value. What this means is that whoever is providing you with the online platform and providing a service through the online platform is subject to this tax. So let's say that maybe you're selling some goods online. That's just a normal business that you should pay tax on. But the person who is providing you with that platform to make the sale, whether it's Facebook or Jumia or Gigi, then they are making some money from that. And that is the income that is subject to digital service tax at 1.5% of the gross transactional value.
Pretty much. So it's actually the organizations that are offering these services as opposed to anybody using this organization to transact, isn't it?
Yes. So if you have a business, you're selling clothes, then you're supposed to pay your taxes.
Yes.
Because if you had a physical business, you'd still be paying for your taxes.
Yes.
But now you're offering this service, digital, remember the name is digital service tax.
Yes.
So if you're offering the digital platform, you're offering services in a digital marketplace, then you're liable to the DST.
Pretty much, Monica, thank you very much for joining us this morning just to lay bare of the new taxes and the tax measures that we do expect to be pushed towards individuals and businesses this year as well. Just as we clear, what do you expect 2021 to look like from your office?
Sorry, I didn't hear that one.
Just as we clear, what do you expect 2021 to look like in terms of the tax environment in Kenya?
Okay. So the tax environment in Kenya has changed a lot. We've simplified our systems. We've simplified our modes of taxation.
Yes.
So we expect more engagement from taxpayers in terms of maybe even our forums. We are revamping our forums and we have them online. So we are telling our taxpayers that these services are free and they're available for you. So we also expect the uptake of maybe the voluntary tax disclosure program by more taxpayers who will now declare their taxes and have a new slate so that in future we are already having compliant taxpayers. So we are very positive. We are very we have a positive mindset that this year is going to be a great year for Kenya and for the Revenue Authority.
Monica Geduba, thank you very much for joining Metropole TV's Business AM.
Thank you.
Right, on that note, we take a short break. Once we come back, let's look at the biggest headlines that are shaping Kenya's economy. On top of that, is Kenya's debt 10.4 trillion already, or is it the 7 trillion once we come back?